Hi, this is JC Parets with AllStarCharts.com, and today we were taking a look at shares of McDonald's. So the first chart here, we're looking at a bar chart that goes back to the consolidation in 2008, 2009, where we had that severe market correction. You know, from a percentage change basis, look how well McDonald's held in during that period of volatility, particularly when compared to the S&P 500 that was essentially cut in half. So the relative strength that we were seeing in shares of McDonald's during that volatile time was a great signal. And sure enough, we had a monster run. So the way that we calculate our targets, you know, we really want to look at the Fibonacci extensions. The first extension of that correction was the 161.8 extension that took us to 80 bucks. And we got there pretty quickly in 2010, sold off as, you know, as we see the market do so often at these critical levels, corrected, and then we were off to the races once we got above that level, went from 80 to above 100, a monster move, another 25% higher. And that essentially took us right to the 261.8% Fibonacci extension of that exact correction. I mean, you can't make this stuff up. The market reacts at those levels, broke out, reacted once again, and if you had ignored those levels since 2012, you would have been flat on this trade or actually down. So we ran into that in 2012, sold off, ran into that level again in 2013, sold off, ran into that level again last year, sold off, and now here we are, you know, attempting once again to break out above that. And, you know, the way I look at it is, you know, triple tops don't exist, you know, really where I come from. They're so rare. I'd have a hard time going back and actually finding one that actually worked. You know, in this case, the more times that a level is tested, the higher the likelihood that it breaks. And structurally speaking, I think we're ultimately going to break out and we're going to see another leg higher. It doesn't mean that we need to buy it today, but I think it's important to get a bigger picture structural view before approaching it from a more tactical perspective. So bigger picture, we like it. We think it ultimately breaks out. So looking a little bit more near term, this is also a weekly chart. We're looking at a candlestick chart, however, and this goes to the uptrend line from the 2011 lows. And this was broken last year, and that's a problem. So we've been stuck underneath this broken downtrend line really for over a year now, and we continue to struggle. So here's the overhead supply just over 100 that we were looking at in the previous chart, but below this uptrend line that broke is a problem. So we really want to see prices getting above that, and I think we can be patient and wait for the market to prove that it's ready for its next leg higher. And then finally, here's a short-term chart of McDonald's. You know, I added a 200-day moving average. And on this major move here in February, a lot of people got really excited in February, early March. And, you know, I thought it was a fade, and I was actually pretty vocal about it because we had that downward sloping 200-day moving average. So when you have a breakout, but the smoothing mechanisms are still pointing down, you know, the market has an awfully difficult time really breaking out when you see that. And sure enough, all we've done is churn. But the good news is that now, after the last 4 or 5 months of churning, the 200-day moving average has now started to slope up. So this is a big development. We have a clear downtrend line from here. So for right now, do we want to be buying this? I don't think it's a good idea. I think we can continue to be patient, but understand that this comes within the context of a much bigger structural, more bullish outlook. But I still think we can be patient. I think there's going to be some more consolidation, and we want to continue to look at this chart and reevaluate this as we get more data. Right now, we're still stuck in this mess. I don't think we need to buy it right away, but if we start taking out these highs and this downtrend line starts breaking, I think the market is essentially telling us that that monster breakout from a structural perspective that we were looking at in the first chart is probably coming sooner than later. But for now, I think we can stay patient.